Bitcoin hit another high of $67,000, hitting up the possibility of reaching $100,000 by the end of the year. Bitcoin has pulled back slightly after hitting a new high on the 20th of October and has fallen out of $60,000 at the end of 27th of October. People have been used to the rates of Bitcoin, whether it's going up to $20,000, $60,000, or $100,000. People don't seem to be too surprised by its fluctuations, simply thinking that expectations have landed because crypto market has become a part of people's lives. Some people are confident about this new all-time high for Bitcoin, and some trading analysts believe that Bitcoin is still in FUBU mode as its on-chain metrics looks promising. However, some others believe that what is driving Bitcoin to record highs in inflationary concerns. They still think Bitcoin is a highly speculative asset class, and they cannot understand what is happening in the cryptocurrency market. The market clearly has different views on subsequent direction of Bitcoin, even in the crypto market. Why did the price of Bitcoin skyrocket in October? Medium and long-term holders reached a new high in the past 2 years, and the long-term holders reached an all-time high. From Glassnode, the percentage of supply holding coins for more than 3 months and longer is now over 85%, which is a new high in the past 2 years. A shift from weak to strong hands is also emerging, with investors willing to hold for longer and longer periods. Previously, there was a period of turndown of Bitcoin under the crackdown of Chinese policies. But as the market stabilized, the influence of policy crackdowns became progressively less. In addition, foreign interest rate hikes were seen as impossible to come in the short term, and the overall environment was better, which also formed long-term investor impact reached all-time highs. Bitcoin Futures Exchange traded funds high. The first US Bitcoin Futures ETF officially landed on the New York Stock Exchange on the 19th of October with the first day turnover of nearly $1 billion, the second highest record in the history. This will also allow a more mature crypto market, as well as bringing a higher level of attention and liquidity. Bitcoin anti-inflation rate. JP Chase published a research report last week stating that investors are pulling out of gold ETFs and into Bitcoin funds. Analysts at JP believe that Bitcoin is considered better inflation hedge than gold, and is the main reason for the current rally, triggering a shift from gold ETF to Bitcoin funds since September. Miners hash rate gradually recovered. There was a massive transfer of Chinese miners. They are also going overseas. On the top of continued efforts from overseas miners, Bitcoin mining difficulties has rebounded by up to 45.5% since late July, and network-wide hash rate is gradually recovering. The recovery of hash rate is a strong reflection and guarantee for security and strong consensus of Bitcoin network. Despite Bitcoin's record height, Bitcoin's biggest negative point still lies in regulatory policy. Recently, the US approved Bitcoin's futures ETF, not spot ETF. Furthermore, under a strong and mature futures ETF regulatory mechanism, the government will bring a big negative to Bitcoin if it implements strong cryptocurrency regulation. And as Barry also said that the data on chain also show that the bull market has not reached the peak stage yet. Long-term investors are still holding the large position and not selling in a large scale, so that the price has not yet peaked. However, it is important to note that there are some of the long-term holders have already started to realize profits, which means selling, and the risk in the market is starting to increase.